What is going on, investors? Let's just dive straight into this, okay? I hope my Discord won't mind me sharing today's morning briefing, because every morning I brief my Discord with what is going on, and I feel like the YouTube community needs to be made aware of what is transpiring right now in Wall Street, what the big money are doing, and why, in particular, these high growth mid to small caps are getting absolutely decimated right now. So here's what I said, okay? Morning investors, I've attached two images to this message. Okay, let me quickly show you the images. So the first image depicts record selling by hedge fund clients of the Bank of America. And as you can see, this is where we are now in 2021. And this has been the highest level of selling by the big money, the institutions, the hedge funds in decades. Bank of America referred to it as record selling by their hedge fund clients. Okay. And the next image represents the best performing sectors over the past 3 months. So this gives you an indication of where money is being rotated into. So as you can see, energy is up 17%, basic materials, financials, industrials, real estate, communication services, consumer defensives, utilities, healthcare. And as you can see, tech is down minus 1.3%. And consumer cyclicals is also down. But as you can see here, tech is being completely destroyed right now. But yet the overall market continues to make all-time highs. So the Dow, the S&P 500, new all-time highs. But you're looking at your portfolio, especially if you are tech heavy, and especially if you followed Kathy Wood's ARK Invest to into a lot of these investments, then you are right here, right now. Okay, you are getting completely creamed. The big money is just piling selling pressure up amongst these categories of stocks, but are loading up in energy, basic materials, and financials. Okay, so those are the two images just to paint the scenario for you. The first of which depicts the activities of Bank of America's institutional and hedge fund activities over a rolling 4-week period. And as demonstrated, they have been net sellers, so record level selling since early February with no indication of slowing down. So if you remember, pretty much November, December, January, and mid-Feb was when all of these stocks were doing insane. They were going crazy. It was a great time. We were making 100%. Penny stocks were flying. Small caps, mid caps, growth stocks were all flying. Okay, but from mid-February we saw the reversal begin. That's when the hedgies started selling. Okay, they started dumping their shares. Now the second picture depicts the performance of different sectors in the market over the past 3-month period. And it clearly shows tech, consumer cyclicals, and healthcare have massively underperformed the likes of energy, basic materials, and financials. Now, what does this all mean? Okay, so big money have essentially been dumping tech stocks, in particular the mid to smaller caps. So your tattooed chefs, your GoPros, even your Palantirs, which you will consider a mid cap stock, completely getting absolutely hammered, regardless of the news. Regardless of earnings, they are getting destroyed. Okay, and they are rotating into the likes of energy and basic materials. This explains why, despite incredible earnings reports from even the largest of blue chip tech stocks, big money continues to sell the stocks, and the only buyers of these dips have been us, the retail investors. Okay, we have been the only ones buying. We've been net buying. Well, I'm sure a lot of retail investors are actually now cashing out. They're cutting their losses and also selling out, and that's adding additional selling pressure to these big names, to these companies. Okay, so with that said, now we've identified what is going on. The question is, what should we do? Okay, and I said here, from a stocks point of view, I think we really have only a few options. Okay, option one is to try and chase these hot performing sectors now. So your energy, your real estate, if you want to chase them now when they're trading at their all-time highs, be my guest. That's entirely up to you, but it is an option. The second option is to stop investing in general and hold until the rotation back into tech stocks occurs from the big money, because it's all to do with cycles, investors. Okay, there's this book. Okay, you need to read this book, Mastering. I don't know if it's I don't know if you can see it, but it's called Mastering the Market Cycle. Okay, if you haven't read this book, read this book. You need to understand what is transpiring right now. So last year, 2020, even early 2021 was pretty much the year for tech stocks. We saw all the headlines, NASDAQ, new all-time highs, all the tech stocks, small, mid, large, they were absolutely going crazy. Okay. And they can't go up forever. There has to be a cycle period whereby it underperforms and then the other sectors outperform. And you're seeing that right now in energy, industrials, real estate, and etc. You can either choose to jump on that bandwagon or you can stop investing in general. But one thing is for certain, tech will probably continue to sell off and it's going to reach valuations whereby it's too cheap to ignore. And then you're going to see big money rotate back into it and drive the prices higher. Okay. That's just how stock market cycles work. Now, your third option is to continue strengthening your positions in these underperforming sectors on the way down. So as they get cheaper, and then enjoy the rewards of the rise back up once big money begins to rotate back into these sectors. So it's not a matter of if, it's just a matter of when. Okay. And you've got to have the stomach to hold it if you want to continue strengthening your positions. Because if you're in this for the long term, like we said, we are long-term investors, then stocks are just getting cheaper, especially your high conviction stocks in this particular sector that's getting beat up right now. They're just getting cheaper. Okay. And your the fourth option you have is to moan that the market is rigged, as opposed to understanding the game and how market cycles work. Realize all your losses and guarantee failure. Okay, that's it. The only time you really lose money in this market is for two reasons. Okay, the first is if the company goes bankrupt, then it's pretty much game over. And the second time you lose money is when you give up, when you quit, and when you sell in the red. Okay. Those are the only times when you're guaranteed failure in this market, because companies can always turn around and continue higher. It's entirely up to you. But if you're looking at your portfolio, especially if you are share price watching and you give up and you quit and you cut your losses, then you've guaranteed yourself failure and you've realized the losses. And I said it simply here. The choice is yours, 100%. And as you can imagine, I am riding with option 3. That's me, okay? I'm going to continue to invest in companies that I believe in the next 5 to 10 years. The current valuations right now, you will laugh at it, okay? And that's what I am choosing to do. And just to put what I've said into context, let's take a look at Amazon. Amazon benefited from the dot-com boom, okay? It had a crazy run up, right? From like what, $5, right? In 1998. It ran up all the way to the highs of the dot-com bubble in 2000 to $113 a share. And look what happened afterwards. So from the year 2000 all the way down, right, to the year 2002, okay, it went from highs of $113 all the way to lows of $5.73. In the space of 2 years. Now, let me tell you this. There was nothing wrong with the company. In fact, Amazon continued to grow their top line. They were spending heavy in research and development. And if you don't believe me, read 100 Baggers. This is another book I highly recommend. Read 100 Baggers. You will see that this company continued to beat expectations, continued to do incredibly well. Nothing was wrong with the business. Quarter after quarter, they were growing. Inventories were growing, expansion, everything was going well, but the company still sold off from $113 to $5 over a 2-year period. I mean, I don't need to tell you where Amazon is right now. So you have a decision to make, okay? You have a decision to make. What option are you going to choose? You've got 4 options in my opinion, and that is up to you. Now, we've had discussions in my Discord, and one of the ways you can cycle into some of these other sectors is by ETFs. And in my Discord, we do live video lessons. We did a live video lesson about a detailed introduction into ETF investing. This is only for members of my Discord. You will not find it anywhere else. Again, these are all private videos where we're educating investors. We've been doing lessons on how to analyze company income statements, etc. So if you want to be a part of the community, you can do so. The link is in the description below. It's entirely up to you. But the whole point of this video is just to let you know is that you've got a decision to make. You've got a choice to make as an investor. What is your end goal? Okay. What are you going to choose? You've got four options. All right. And hopefully you're choosing at least option 2 or option 3. But it's entirely up to you. I leave it in your hands. So that's all I have to say. Peter Lynch has said the most important organ in investing is not the brain, it's the stomach. Okay. So I'll leave it at that. Thank you so much for watching, and I'll catch you in the next one. Peace.